FX Nation, what's up, guys? Welcome back to ForexU, and welcome back to our advanced course. So, in this video, guys, what we're going to go ahead and break down and talk about, I think, a very important topic that a lot of people overlook or really just don't look too deep into. Okay, so what I'm talking about is essentially we're talking about the trading mindset. Okay, so what we're going to do is I'm going to walk you through my mindset essentially from the beginning of the week to the end of the week. And we're going to replay the entire week on several different pairs. And we're just going to see what happens, right? We're going to see whether, win, lose trades, whatever happens. But I want you to just listen essentially to the mindset as I'm going through each day, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, the whole thing. Okay, and start to formulate that type of thinking of understanding essentially the different behaviors that basically happen over and over and over again. You just essentially have to get used to the behaviors that keep happening. And so one of the things that takes the longest time, and that's just because you're having the back test, is really the behaviors that market makers show you over and over and over again, and getting used to those behaviors. And once you recognize the behaviors that you see market makers do, you're able to go ahead and make some pretty good predictions as far as where you think price is going to go, or what you could expect for that day. Okay, so the trading mindset, very important. So let's jump over to the charts, and then let's go ahead and go through it all, and we'll go through the entire week on several different pairs. All right, so let's get this going, guys. All right, guys, so let's talk about this. What does it take to really take trading to another level? And to me, what helped me out tremendously is basically trying to think like a market maker, right? And think of it like you had $3 trillion or whatever, and you were really trying to fool retail traders. How would you do it? Okay, so let's go into the charts, and let's take a look at a week, and let me show you the way that I think when I look at this stuff. So that way you can start to essentially copy and do the same thing. And hopefully over time, you'll be able to create this over and over and over again. Let's go to pound JPY, and we're going to go back a while. We're going to go back to like last year or something. So let's go back to back here. Let's see how far we can go back. All right, guys, so we're back here. This is like September 2019. So we're going to start the week off just so we can show you essentially what I'm talking about and how I process all this. All right, so the first thing is, if you're trading Sunday, Monday, all right, the only thing that you have to go off of is the previous week. Obviously, the previous week is only going to tell you what type of cycle that previous week was. So, for example, if we look at this here, we have essentially, we have a market maker cycle here on the previous week, and then it goes right into a trending cycle. Okay, so we have a trending cycle previous week. All right, so let's take a look and see essentially what happens Sunday, Monday. And so if you're trading Sunday, Monday, I think it's very important for you to be aware that anything can happen Sunday, Monday, right? Pretty much. So you want to be prepared for pretty much anything. You're like an open book, essentially. And so as we play this out, understand essentially what's happening here when you look at the actual price action. All right, so as we go through this here, what are we seeing right now? We're seeing potentially, let's just say, a peak formation high here so far, and then goes down to level 1, let's just say. And then we have the 50 here that's basically keeping price at the very top of the range or spiking. Do you see that? Do you see that spike that happens there? So that spike that happens there could be a clue, essentially, that we could be actually looking for potential sells, especially if you have the 200 that's right here, right there as well. So that could also hold price in place. So as we take a look, all right, so right here, do you see this? Look, do you see that M right there? And then do you also see, look at the TDI right here. You see how it's curving down? Let's play this out a little bit. There's your crossover. Okay, so this could be basically a type 2 setup. Now, ideally, what we would like to see is a pullback. So if we can get a pullback on the next candle, maybe half the candle right now, that way we can get, and then 30 pips is probably like right there. And so your risk reward ratio is under 13 pips, 2-to-1 risk reward ratio, if we can get a pullback on the next candle. All right, and that pullback, if it fits at least half of the bar where the crossover happened. So there's a pullback, and then let's see how this plays out. All right, so you take profit there, you're done. Okay, so there's your profit hit. Now if we play this out, you can see it goes down way further, but we go into the US session now. Okay, now the US session, obviously, since we're done trading, honestly, if you get 30 pips, guys, during London, just leave it for the day. There's no reason to go back for the US session. All right, there's just no reason for that at all. All right, so don't do it. Just get your money and get out. All right, so as we move on to the next day, all right, we basically prepare to see what happened on Sunday, Monday. So Sunday, Monday, we basically had a false move down. All right, false move in one direction. Now, depending on what we get on Tuesday will help us determine what type of a cycle this is going to be in. Okay, and so let's see essentially how this Asian range plays out. So you can see that we have basically the 200 at top, the 50 on the bottom, right? So when you have this kind of behavior, okay, when you have both of them, it basically kind of squishes price or squeezes price in the middle, right? So typically you're going to end up getting possibly a type 3 setup here. Now the problem is that it may not be the setup that we want, though, because it comes out of the middle of the range. So you see how it comes out of the middle, and it doesn't go all the way down to the bottom. It just spikes. You see that? You see how it's keeping it basically back and forth, back and forth, back and forth. Okay, so ideally this is not the type 3 setup that we want to trade, but this is literally like the only option that it's giving us. You can see how basically price right here is being squeezed by the yellow and then the outer band here. So as we play this out, you can see that price now starts to basically go away from the 50 and moving up. Now we go up to the top of the range here, you see, and then now we come back. So can we get, if we can get an actual like spike down here, or just even a little bit more to where we could touch the 50 possibly, we can get like a type 3 setup, because it may have started out in the middle, but it did go to the top of the range and then it came back down to the middle, okay, and then gets rejected. So let's see here. All right, so there's one right there. So what's the next candle? Okay, you see how it keeps squeezing it out more and more and more. All right, so there's the candle right there. So the question is, can we get another pullback basically to get us into the trade? Because this candle is like 10 pips big, right? So ideally I would like to have maybe an entry right here, maybe half of that candle, and then you could use like a 12 pip, 14 pip stop loss right below the middle of the range, and then essentially your target is going to be the target would be either yesterday's high or the previous week's high. Okay, so let's see what happens. All right, so perfect. There's the pullback, and then that would have put us into the trade, that pullback there. And then let's see what happens. Okay. All right, so we get to the top of yesterday's high, which is great. Now, this tells us kind of a story that we want to see. All right, so essentially what this lets us know is that if we went up false move Sunday, Monday, and then we went on Tuesday, did a type 3 straight up, okay, we went basically past or to yesterday's high, and we're ranging on that yesterday's high now. Okay, so now this basically looks like a market maker cycle because we had a full day of rise. We didn't have a pullback, on London or anything like that. We literally had a full day of rise. So it rose London and it rose New York. So if this is a market maker cycle, what's going to be very interesting to see is we have previous week's high here. So essentially there's, like I always talk about, a couple different scenarios that we can look for. We can look for price to basically tag previous week's high here and make like a type 1 setup. We could look for potentially a type 2 setup. It all depends, guys, on how the Asian session is. Okay, it all depends on this Asian session because you can see we're not going to get like a multi-day M because we're already past that high. Okay, so let's see what we get here. So as we play this out, okay, it comes out of the middle of the range. Oh, right there. Do you see that? So here's the thing. We got a 13 pip Asian range. Okay, ideally we would want a type 1 setup on this. Okay, but knowing if this is a market maker cycle, we're really looking for sells. Okay, and so in this situation, it's not going to give us a type 1 setup all the way up here because look how price is behaving. Okay, it's all about how price is behaving in that situation. You may want to have a type 1 setup all the way up here, but if you see price in the Asian range is not giving you that, guys, it's not going to give it to you. Okay, so you have to take what it gives you, and you have to be able to adjust depending on what behavior you're getting essentially from this specific type of setup. Okay, so this is more than likely going to be a type 3 setup. There's no question about it because you have big bars, basically going back and forth, back and forth. You have the 50 here that's basically holding it until it breaks it. Okay, so it could either go straight sideways the entire day, or literally this is going to be the midweek reversal that we're waiting for, essentially on a market maker cycle. Okay, so as we play this out, all right, we're looking for basically an entry, and ideally, this after this candle's over with, this would be a pretty good entry because your stop loss would be super tight because of what it is here. You can even go all the way up to the top of the range here on a 7 pip, stop loss. But your risk reward is going to be huge because you can take it to the this 200 EMA. And that's about 30 pips. Now on a risk reward ratio, look at that. That's like almost 5 to 1, right? So let's see what we get here. So there's your take profit. And then look, you even get, you see this? Look, you get a type 1 W into the US session. Yeah. There's your crossover here. Here's your crossover. So can you get a pullback? Can you get a pullback? And you could possibly take a very short trade, like very short trade, back up, possibly to the top of the range here, the top of this, the bottom of this range. let's see. So from here, it's only about 9 to 10 pips. I personally don't think it's worth it. So I don't think it's something to pursue, to be honest with you. Yeah, so basically made it to them back to the middle. All right, so that wasn't a good. That wasn't the best setup. All right, so let's go into what, Thursday. So we go into Thursday, and essentially we're looking for what? We're looking for sells on Thursday, right? So let's see how this range works. All right, Tammy. So you see how this range went all the way down 68 pips. Okay, so you have to think about this, guys. All right, think about how this is basically coming out as right now. So this is essentially saying this Asian range 68 pips. So it made a huge down move already. Okay, so what is the likelihood of this actually continuing to go down again during, let's say, London? You know, if we see how price is going back up again. And look, you see, you're not getting anything in particular. You see this? You see how now the 200 and the 50 is straight through price moving sideways. It's not pointing, you know, up or down. It's literally just going straight sideways. Do you see that? So that's no good. Now, if you get this kind of behavior, then ideally we would want something to possibly happen during the US session. The problem is that it's not really an ideal setup, you know, because we're not at the top of the range at all. We're like literally almost in the middle, and all we're doing is we're basically riding yesterday's low, you know, but we're still looking for sell setups. So you see how we're going into the New York session, and we're basically pinning. You see how we're pinning this? Pin, 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 pin. That should give you a clue, guys, as to what they're doing. They're just collecting. That's all they're doing. See, why would price just hold up there? Do you see that? There's no reason for price to hold up there at all. Okay? So you just had a crossover here. It's what, 9, what time is it? 10:15 in the morning. So unless you get some kind of a bigger move to happen, which you don't. Look, you see that? It's just moving straight sideways. Alright, so there is your move here. But it's way too late. I mean, granted, what would have been like 23 pips or something? It's really not worth the risk if the trade setup isn't clear. You understand? There's no way there's no reason to take that trade, essentially. So let's just go to Friday. So Friday could be one of those tricky days, right? Because Friday, basically, they could do something to basically set up the next week's, you know, cycle. So very important that if you're going to trade on Friday, all right, number one, it's got to be a really good setup. Okay, the setup has to be clear, has to be concise, and has to go with basically the cycle that you're in. So for example, we're in a market maker cycle, we're looking for sells, right? So this should be a perfect, not even a perfect, but a good setup for sell. So either a type 2 or type 1 setup for a sell. All right, so again, we just have to play out with what the range is telling us, what the Asian range does. So the Asian range, let's play this out here. This Asian range is 14 pips. Okay, so 14 pip range. So unless we get something out here that's a type 1 setup, that's going to be the ideal setup for us. Okay, but let's see what price does. All right, so you see how price basically is moving back and forth, back and forth, back and forth. Okay, this behavior here with the 200 being on top tells you we're not gonna get a type 1 setup. Okay, we're more than likely gonna get a type 2 setup, and that's what we have to take. If you want to take this trade, it's gonna have to be a type 2 setup because of the behavior that we're getting. Okay, so being able to recognize this behavior, guys, is huge. It's huge. It plays a huge part. All right, so let's see. Yeah, but you see how price is literally just going back and forth, back and forth, back and forth. So the best thing to try to do is, if you're gonna get into any of this trade, is you might as well get up from the top, because that 200 is protecting you, right? So if you can get in a trade from the very top, okay, and see what happens, see if you get some kind of a trade going back down again. Yeah, so that previous candle there would have been a good entry. This previous candle here that moved up, and you can't be scared to take this stuff either, guys, because look, if you take this short, like literally, what are we talking about? We're talking about 6 pips. We're not talking about 15 pips. We're talking about 6 pips. Okay, so we're talking about very little pips, and you can take it to yesterday's low, and that would easily get you 38 pips. You see that? So we already know that this next candle dropped. So there you go. And then look, it keeps going. Holy smokes. Alright, so it went down a total of like 63 pips. No matter what. 38 pips out of it. Not a bad trade. Okay, not a bad trade. So essentially, you end up getting, on a market maker cycle for that week, 1, 2, 3, 4 trades. Okay, 4 trades during that week on a market maker cycle. All right, and so you understand the process that you're going through every day. You're basically determining, essentially, based on what the Asian range is. If it's huge, how did it move? That's huge to know how did this Asian range move. Okay, so like on Wednesday, you had this Asian range move very fast on a downtrend like this, right? So that basically very limited in you, essentially, what you could do during London or during New York. Okay, and so you see what happened. You see what happened. Okay, so adjust according to what's given to you. Friday is another example. You had a very small Asian range, right? Ideally, you would have liked the type 1, but you saw how price was behaving during the London session. It was just going back and forth, back and forth, back and forth, and that 200 kept it there. So you knew you weren't going to get a type 1 setup. Okay, you knew you weren't going to get a type 1 setup, so there's no way to expect a type 1 setup. You'd have to expect a type 2 setup here, just because of the way that price is behaving. So understanding the behavior is huge. Understanding the behavior is huge. Okay, same thing here, guys. Look, if you get this Asian range and you're expecting a type 1 setup, or you want a type 1 setup, you actually got a type 1 setup, but it was it was during the US session. But the behavior here that you saw of back and forth, back and forth, back and forth, essentially is what would have led you to get into the trade, knowing the behavior that you're not going to get a type 1 setup here. The type 1 setup would have been here in the US session. Understanding you have a 37 pip range, and look what price is doing right here, right? So knowing that it's doing this, you know that you cannot get a type 2 setup from the bottom. Okay, you're looking for a type 3 setup potentially going to go higher. So it's all about understanding what it gives you during the Asian range and what to expect. Okay, just like here, same thing, 36 pip Asian range. You see how it's spiking. So you pretty confident in the fact that you're not going to get some crazy up move, because if you were going to get a crazy up move, it would already happened. You would have already gotten that indication. Okay, so hugely important to understand essentially the process that happens. The process that happens basically, that market makers go through, essentially. It's huge. It's huge to know and to understand, and really just to think like a market maker. That's it. Think like a market maker. It's going to play a huge part in how you do trading and how you trade. So let's take a look at this pound JPY. And let's break down this week as I would see it here. So let's go ahead and start this out. So we're looking at the previous week, which is the first thing that we should look at. And you can see we basically had a trending cycle, right? We had a trending cycle that week. So let's go ahead and play this out knowing that we had a trending cycle, okay? And let's take a look. So let's play this out and see what we get during the Asian session. So Asian session, we got 142 pip range. Okay, huge range, obviously, right? So let's see, now that we know what the range is, all right, we can see basically the bigger EMAs, the 200 here, and then also obviously the 50s riding right in the middle along with price. Now, obviously we see that price is moving basically outside of the Asian box in the middle of the range, right? So it's moving outside of the box in the middle of the range. So that inherently tells us what automatically? That we're going to have to wait essentially for price to either go to the top or go to the bottom, right? To get us either type 3, type 2, whatever it is. Okay? So because it's coming out of the middle, we already have that kind of that sense of expectation of we need this price to come down or come up to the top, and then provide us with some kind of a setup. Okay, now as this goes along here and we go into the London session, let's see. All right, so just you can see basically where price is just basically literally moving just sideways, right? It's not doing anything. It's just collecting contracts, collecting contracts. So it's not doing anything as of yet. Okay, so we don't have anything to trade essentially. All right, so now you essentially see how the 200 is basically blocking price from moving straight down to the bottom of the range. You see that, right? So you see how it's blocking it from essentially getting to the bottom. So very likely, guys, because of this type of behavior and because of the EMA being here, that we're not going to get price to come back down, okay, to the bottom of the range to get a setup. So this very likely could be a situation essentially where we might not get a setup during London, or if we do get if this price does move up, essentially it's not going to give us potentially a setup that we can actually take that's like within our rules, right? So it might be like a setup where you would basically get this moving sideways out the middle, and then it just goes in one direction. Okay, so expect that kind of behavior depending on what you look at during the Asian range, and most importantly during London. Okay, so yeah. All right, so you see how price basically is broken past above basically that barrier right there. You see how that's broken outside of that? Okay, so that's a pretty good indication if we get another candle here that potentially this is going to go to go up higher if we break free past this. Yeah, so there you go. So now we get into the US session, right? So this really didn't provide any kind of a setup. Once you get more experience with this, right, you'll understand the behavior that's happening here, and you might not be scared to take this trade up. Okay, but let's see what happens here in the New York session. See if we get any kind of a setup. All right, so here, let's open this up a little bit. All right, so you can potentially see that we have essentially like an M. We have the first leg here and the second leg basically here. Okay, now you can see on this particular candle, we've gone ahead and we've closed below the 13, right? So we could potentially have a situation where we have a trade coming down, okay, because we're basically like, tapping close to these highs up here from the previous week. Okay, you see if we go like basically candle to candle, we're pretty close to that. Okay, so let's say what's the risk versus the reward of taking a trade like that? So if we take a look, 44 pips of risk basically to get 55, let's say just to get to the middle of the range, right? So basically like a 1-to-1 risk to reward ratio. Is that essentially worth the risk? Is it really worth the risk? I don't think it is, because a 1-to-1 risk to reward ratio, 44 pips, even if you bring down, look, even if you come down to above that candle, you're still at 30 pips. Okay, 30 pips. So I know that with JPY pairs, you're going to have to incur a little bit more of a risk. So like, let's say instead of 15, you're looking at 20, 25, right? So with this one, you're looking at 29. So if you're thinking about possibly taking this trade, ideally you would want to get a pullback, to get basically a better entry, right? So if we can get a pullback like maybe half up the candle like here, then we can possibly lower it to 18. Now we're looking for a way better trade. And now we're looking from a 3 to, we go from a 1-to-1 to a 3-to-1, right? So huge difference basically in that. So let's take a look and see what happens here. Okay, so we got a little bit of a pullback, but not nothing significantly enough essentially to get us into that particular type of trade. Because even if we were to get into that pullback here, and let's say right there, so even if we were to get into this trade, okay, at the very tip of this pullback here, right around here, around this area here, I just don't want to keep doing that because that damn thing keeps popping up. So right around here, you're still looking at about a 25 pips, about your max, of what you could potentially get from here. So, you're looking at a 2-to-1 risk reward ratio now with that little pullback. Okay, but you have to have a really tight stop loss here on the top of that candle. So let's see if that's going to be even worth it. Okay. Okay, so that played out in your favor, which is great, but you can see essentially how you would have to basically take this trade all the way up here in that pullback. That pullback is huge because it basically makes it from a very not likely trade to a very possible trade. Okay, and if you're waiting for the crossover, which is on this candle here, basically your pullback would be like right here on this next candle. And let's see, your entry would have been somewhere around right there. And your risk is still about 24 pips anyways. But the problem is now you go basically to a 42 pip. It's close to a 2-to-1. It's 1.75 to 1. Okay? Unless you basically literally lower your risk substantially, and then you run the risk pretty much of getting stopped out because of the spread. Okay, depending on your broker. All right, so that's one example here, but this is only on Sunday, Monday. All right, so let's take a look and see how this plays out for the rest of the week here. So we're going into Tuesday now. So Tuesday is going to be very important. All right, so you can see here that essentially what did we do Sunday, Monday? In reality, all we did Sunday, Monday was here. Look, we moved down, back up. We basically moved sideways, right? Is all we did on Sunday, Monday. So now basically we have price trading between a high and a low, Okay, so depending on what actually happens on Tuesday will help us determine what kind of a cycle we're going to be in. Okay, so as we move this along, and we can see already that 109 pip Asian range, this was back in March, so this is when the coronavirus thing was going on. So obviously you're going to have huge, huge Asian ranges. So, but still, we kind of get the same situation. We're moving out inside the middle of the range. Okay, so possibly not the best ideal, and you can see how tight the 50 and the 200 are. So essentially, we may get something just like this again, a situation like this. Okay, let's take a look, and let's see. Okay, yeah, you can see we move down. We're literally right there, and we're just basically moving sideways. Same thing. We just had a crossover right here, and then you can see basically the high is right there of this little kind of, this little area that we're working with. Okay, so there's the breakout right there. Okay, so can we get essentially a pullback to help us get into a trade? Okay, if you're going to trade this. And the only reason this becomes even relevant of a trade is because we know the behavior, because we already saw it the previous day. We saw that it basically the 200 prevented price from going all the way down. And this is doing the exact same thing. The exact same thing is happening. Okay, now because we know that we're in this range, right? We're looking for a trade back up to here, which is about 70 pips away. Okay, so 70 pips. So the profits potential is there. Okay, the profit potential is there. We just need to get a good entry. Okay, so if we can get a pullback here in this area, we could go long, and our long would probably go up to here. So if we can get basically a pullback, we can use the 200 as our stop loss here. So let's see what happens. Okay, right there. We can use that pullback right here. Okay, and we're at about a 27 pip. We're still at a 2-to-1 risk to reward ratio though, because our target would be the high of yesterday. Okay, so let's see if we get stopped out or if we make it. Come on. All right, so there it is. So that little pin bar there just made it. That one made it for sure. Okay, so that one made it to the high. Okay, so that would have taken us out of the trade. Let's take profit. That's 70 pips right there. So now we're 9:15. We're not even open for the U.S. session yet officially. And then let's see what we have. Okay, do you see this right here? Look at this right here. Look at what's happening. Do you see how it keeps spiking to the high of yesterday? Spike, 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 spike. You see that behavior? That behavior is an indication of a possible M here. Okay? Possible M here. Also, on this previous trade, look at the TDI. Do you see how we made basically a multi-session W here from first leg, second leg? You see that? Right here to right here. And then we were moving up higher and higher. By the time our entry was, look, we were already up here on the TDI. So again, good indication of confirmation there. So now, essentially, what we're looking for is on the TDI. Can we look for an entry right here? Let's see. No. Boom. You see that? Look, it went up and then spiked really hard. Boom, look at that. Damn, that would have been a nice candle. That's too big though. Is there a pullback at all that happens? Yes, look at that pullback right here. So this is the cross that happens, okay? And then here we have a pullback. So what would be essentially, what would be the entry here? So if we take it, let's just say down to the middle of the range where the 200 is, right? Make it something that's easy to essentially obtain. We're looking at about 50 pip range. Look at the TDI, it's already down here close to the 50. All right, so we know we're definitely moving lower on the TDI. As far as the stop loss go, you can put it probably above this candle here, and you're still about 20 pips, so you're about 2.5 to 1 risk to reward ratio. All right, so let's see essentially what happens. Do we get stopped out, or do we not get stopped out? Let's see. Ooh, almost. I don't know. This could have possibly stopped us out on that candle there, depending on how big the spread was at that time. But let's see what happens. Okay, so it does get to take profit, but we just don't know depending on how big that spread was. But you can see, again, if you would have used, 25, which is your max, I think you would have been just fine, but it pinned right back up to the high. You see that? To the high of that candle. So depending on where your stop loss is, whether it's 20 pips, 25 pips, also the spread, that's another thing to consider as well. But you can see essentially the pattern was there, the timing of it was there, and even the pullback was there, and you still got over 2 to 1 risk to reward ratio. Okay, so now because of what happened on Tuesday, what does this look like? Looks like we're coming from a trending cycle into what? An accumulation cycle, right? Because we're basically doing support and resistance. Okay, so let's pass forward to the Wednesday and let's take a look. All right, so here's Wednesday. Okay, so Wednesday, this is pretty interesting. So 71 pip Asian range, and now basically we moved during the Asian range straight down a little bit below where the low of essentially the week is so far, right? So let's see if essentially does this play a part where basically we're moving across this line, or do we move further down and basically come off and bounce off the 800? And let's see what we could potentially get here off of that. All right, so here potentially we're looking at what? At type 1, type 2 setup, because it's right below on the right below the bottom here of the low of the Asia range. So we're about 30 pips or so. So I would call that a type 1 setup. First leg is down here. Second leg is here. Okay, here's the close above. We still haven't crossed yet. Let's see if we get a pullback. There's a pullback right there. We still don't have the cross though. So if you're an aggressive trader, that might be, a no-no for you just yet. But if you keep getting these pullbacks, you see these wick candles that keep happening. So all these candles here could be used, if you're an aggressive trader, could be used essentially as an entry. Okay. Now, what would be essentially the setup, even if you were thinking about entering a trade like this, right? So, I mean, you'd be looking at, let's say, a 13 pip, stop loss, and then I don't know. I would probably say the safe thing to do would probably be go to the 50, because it's going to the 50 and then the middle of the range, and then obviously the second target would be around the 200 EMA. But if we can get to the 50, that still gives us 35 pips. So this is still a 2 to 1, almost a 3 to 1 risk to reward ratio if we use these pullbacks. If we use the pullbacks to our advantage here to get into a trade, then we could potentially have still over a 2 to 1 risk to reward ratio. So as we play this out, look at the TDI as well. It's already moving past above the yellow line. Oh man, look at that. We got stopped out there. Damn. Okay. There's a crossover there. There's a pullback. All right. So here's a lesson, right? Is this could happen, right? You can get basically stopped out early. This is the risk that you take by becoming aggressive. By being an aggressive trader, meaning not waiting for the crossover to happen in a pullback, if you just wait for the 13 to crossover in a pullback, this is something that could happen. You could get wicked, you basically get wicked, right, and taken out of the trade, okay, and taken out, right? The only thing that you could possibly do to avoid it is basically move your stop loss down further than 13 pips. But now, instead of a 2-to-1, 3-to-1 risk to reward ratio, now basically it becomes a trade really that's not in your favor. You know what I mean? So that's very important. And then now, you know, essentially you're looking at a trade really that's not even, you know, it's not even possible, because you're only talking about 22 pips. You're risking about 15, even on a conservative, stop loss. So this is not worth taking, essentially, if you got stopped out here on the aggressive trade. If you're a conservative trader, right, this essentially could not be a setup for you, because the risk is to reward is just not there. It would that risk reward would basically keep you out of the trade. Okay, so let's play this out. All right, so here we are essentially in the opening of the New York session. All right, we're not at the low. How many pips are we from the low here? From the low of the day so far, we're about 40 pips from the low. So obviously we're not trading off the low. And then off the high of the day so far, we're about 32 pips. So ideally, we're like in the middle, right? We're essentially like in the middle. So this potentially gives us an opportunity to go long and have a continuation trade of this. So essentially it would be like a trade like this, right? So what is the risk to reward ratio on something like this if we were to take a trade like this? So a 20 pip 20 pip stop loss, and then to go, we would have to go to the 200 to make it worthwhile. So about 40 pips. It's literally right there at 2-to-1 risk to reward ratio. Okay, so let's see what happens and see if this is a continuation trade that we can potentially take, and let's see if this works out for us. All right, so looks like right here, this pinned all the way back up and went past it. So this would have hit take profit. So 40 pips on a 2-to-1 risk reward ratio, basically like a continuation trade. You would have taken it like a continuation trade. Okay. So yeah, so that would have been that particular trade. So let's move on to Thursday here, and we're still thinking it's a continuation trade or an accumulation cycle, because we're basically still trading within this, you know, the support and resistance that was built from Sunday, Monday. So we're still in that type of cycle, right? So essentially we depending on what happens here for the next day, let's see. Okay, so I mean, really, you can see we'd still be looking for what? We'd still be looking for buys, right, for Thursday. Now, as we come out of the Asian session here, 58 pip Asian range, okay, we've already hit the top of the range. You can see now that the 200 is going straight through price, right? And you see the 50 is now below it, all right? So let's see what happens. Okay, so this behavior right here is what we saw, basically what we saw Sunday, Monday, but it's happening. It actually went from the top and it went to the middle. So the only real trade I think that you can get out of it, if we're looking for buys, is a type 3 setup. Boom, look at that. That right there would have been a nice entry candle right here. So I think this right here would be 27 pips. Good Lord. That's way too much. Let me see. So to get to yesterday's high, 55 pips, 2-to-1 risk to reward ratio, 27 pips. 2-to-1 risk to reward ratio. Let's see if we can get there or not. I don't know. Come on. Yes. Okay. So we made it there. Wow, look at that. That's amazing. Okay, so what happens for the US session here? Ooh. So for the US session open, we're like already, we're not, definitely not at the top, obviously. We're, you know, nowhere near the middle of the range here. So that was a pretty aggressive candle there. Let's see what happens. Oh, straight down. Wow. Okay. Ooh, straight up. Look at this right here. Damn, we missed it. W here. But there was really, man, that's not really an entry because the 13 is way too far away. So that would not have been an entry. Okay, so we got just one trade out of that. All right, let's go to Friday here and let's take a look. All right, so essentially, look, we know that we're in a, what kind of a cycle? Accumulation cycle. We know that because we've been working between the high and the low of the week so far. So we're pretty much close to the top. All right, so depending on, and Friday's one of those days that I keep saying that, you know, it doesn't always work out to where how you want it to work out because obviously Friday they use it a lot to set up for the next week. So unless the pattern is really good, then essentially we won't trade on Friday. But let's see what happens here during this Asian range. Okay, so 43 pip Asian range. All right, and we basically have a situation now where, again, the EMAs are going to play a part because the EMAs are basically one above, one below. So you're probably going to look at a squeeze, essentially, is what's going to happen. Okay, it's going to have a squeeze out of this. Yeah, see, you see that big candle right there, that big wick? There's a reason that wicked all the way up there. Okay, so essentially this tells us, okay, that potentially market makers don't want to go higher. They want to go actually lower. Okay, because there's no reason why would you wick and then wick 2 bars in a row like this. Let's see what happens here. Yeah, see that? Let's see. Boom. Hey, see that again? Wicks, that 50 right here is going to keep this from not reaching the middle of the range. So I would definitely be looking more for sells than buys because of this behavior. I almost feel like there's a breakout that's going to happen because these two EMAs are basically going to squeeze price out of it. You know, so essentially I would want to have price basically break this structure right here and break. And so if it breaks that structure, then potentially we could be looking at a situation where we could get, you know, a trade set up essentially on that particular day or for this day here. Okay, so let's see. Yeah, so that candle right there is probably going to do it. So let's see, 31 pip. That's way too much. You'd have to put it up right above that candle there, which is what, 20 pips. And then where the hell do we take this? The first real point really is, damn, all the way down here to the 800. I don't know if we'll actually get there or not. That's pretty far away. It's like 70 pips away. So how about we mark it first 30 and then we'll just see what happens here. So if we get to 30, we're basically looking at not a 2-to-1 risk to reward ratio. So we're going to have to go all the way to what? To 42 pips to get this trade. So let's see what happens. All right. Ooh, we hit it. Nice. Almost just in place. All right, so we hit that. Do we reverse? Ooh, does it reverse? Let's see. All right, so we're opening the U.S. session. And essentially, what do we have? We're basically a good distance away from the low of the day, supposedly right now, about 46 pips. we're definitely way, away from the high of the day. So we're kind of in the middle, right? So we could potentially see a continuation trade here for the New York session. So let's take a look and let's see what we get here. Hopefully we can get some type of a setup. Okay, there's that pin bar there. Ooh, there it is. My goodness. Yep, that was it right there. That pullback isn't going to help at all. That's way too far, obviously. So let me take this out. Let's pull this out here. That's that trade. Let's see. Okay, so we had all the way, look, we had a pin all the way back up. I mean, at this point, I don't think that there's going to be a trade set up here. Even though it's 9:30, we pinned the 50 and the 200. Okay. I don't know. I don't think if this was going to be something that goes short, 23 pip, let's see, to the 800, 50 pips, 2 to 1. The setup, I'll tell you, the setup doesn't look the best, but let's see what happens. Wow, it actually, damn, just made it. Look at that. So it did make it, look, it did make it all the way down to yesterday's low. How about that? So that would have been another trade there, but it was really just really messy. Really the ideal would have been to get in super early here, but you would have had to get in like crazy early, like back here, like on this candle right here, the very beginning, but that candle I think might have given you like, I don't know about that, but regardless, you saw what happened. Okay, so we basically had an accumulation. Okay, we had an accumulation cycle that week, and we ended up in 1, 2, 3, 4, 5, 6 trades. 6 trades, and what, we lost one of them where we got stopped out at, right? So 6 trades on our accumulation cycle. That's pretty big, actually. That's a lot. Normally you don't get that many, maybe get 3 or 4 at the most. But you saw, guys, the important thing is you see the entire process of the thinking that literally I go through. This is me talking to myself the entire week. This is the thought process that I go through the entire week of doing this. Okay, so I hope that this literally helps you with these 2 examples, kind of like what am I thinking when I'm looking at this stuff. I hope this really helps you out in understanding the process that I go through with looking at these charts and looking at the weekly analysis and kind of the thought process that goes through with the behaviors and everything like that. All right, guys? All right, guys, so I hope that this video provided a lot of value for you, and hopefully this video broke down my thoughts throughout the entire week. Okay, whether they're good trades or bad trades, it doesn't matter. All right, the important thing is just understanding the mindset that you have to be in every single week that you come to trade. All right, so I hope that you enjoyed this week's video for the advanced course, guys, and we'll see you next week with another one.